Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Happy Tuesday, everybody. Hope everybody is having a wonderful trading week. It's only 2 days in, but you never know. So let's get right into it. Again, I'm gonna just a couple things. I'm gonna have a class coming up post Christmas, going into the new year next Wednesday, a week from tomorrow. And I'm going to be discussing the new year, getting you set up for, I think, what I foresee is going to be a turbulent first quarter. So we need to, kind of prepare for that and get some strategy going on that, on the options and futures. So we'll see how that, if you want to sign up for that, there's a link below. It is free also, right? And I know a lot of people are kind of in holiday mode and all that. Hey, how you doing, JT? But as you saw yesterday with the Bank of Japan, volatility is still going to be in the markets, right? As I think I mentioned that the other day, and I mentioned the Bank of Japan and the yen. So let's actually start there because it's really interesting. Got a lot of questions about that. What happened last night? Why the markets move, the interest rate markets, and you got run over. Yeah, well, here's the thing, JT. I mean, look, markets are, even though they seem to be going down. Oh, okay, good. All in all, markets are very, very choppy right now, as you know. I mean, even again, like last night, if you were watching last night, when the Bank of Japan came out, the S&P tanked, right? Went all the way down to 3,800. 3,806 was a low, and then spent pretty much going into London and coming into the New York Open right back up again. And so you keep getting these, it's still that tug of war. Where we had that big sell-off post, that big reversal, and so on and so forth. So at the end of the day, I still think we're up in for a lot of chop. However, here's the thing, this core PCE number on Friday, with the thin market conditions and the market being hypersensitive to all kinds of stuff, I think we still have a potential for more volatility. And I don't think, even though, I jokingly said today that Santa Claus is in the ER. I think I may have said that. I've been using that too much. Santa Claus is in the ER on life support, right? So you would think the Santa Claus rally, right? However, I wouldn't discount. Remember that the seasonal actually kicks in on Thursday. I don't know if you guys, if you look at your calendar, your almanac, or whatever wherever you get the seasonal, that actually kicks in on Thursday, this coming Thursday. So is there a chance we could rally? At least 50, 60 points. Market's hanging in there, right, JT? I mean, the S&P. They're throwing everything at that thing, and still kind of hanging in there. So it's going to be interesting to see. I personally, as you know, I don't discount anything. I don't, just get kind of dogmatic about, oh, it's a bear market and it's got to go down and blah blah blah. That never from a trading perspective, you have to be flexible and be open to any possibilities. And so now, that being said, if the market, there is a chance. Let's actually look at some levels here, and then I'm going to get into the yen, what happened, and what significance that may have going forward. But I've been talking. I think last time I was here on Friday, I talked about the 37.66. 37.45 level in the S&P, which is essentially where we took off from the November CPI. So let's see. What is that about JP Morgan having puts? Well, yeah, again, I think what's going on, JT, that's a good, there's a massive amount of put still in the market. And so what happens is that literally is, I think, what's putting a floor in the market. That's why the market just can't get any like full traction, even though, I mean, obviously we've reversed almost, from that peak. Yep. So we'll see. But all in all, you can see, if you look at your charts, you can see even once we broke 3950, which is that support level on your charts, if you look at your S&P, we've kind of just been chopping around, kind of grinding lower. No question. We pause, chop, 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 and then take another leg lower, and then chop, chop. So I think eventually we're probably going to work our way down to 37, 6 or lower. However, could we have a bounce at least back up to the breakout point around 3920, 3950? Yep, that could be a possibility. And that could be like your so-called, seasonal Santa Claus rally, whatever. Too early to say. We'll have to see. I am looking at a potential volatility play in the S&P, maybe even tonight. We are coming in this afternoon. We're coming in with Nike. Nike's coming in with earnings, so we are positioned for that. We'll see what happens here. They haven't reported yet. I think they were reporting about 20 minutes or something. That, and we still have Oracle. We try to get long. We're also trying to get long Nat Gas. You saw Nat Gas just got crunched today. Looks like it's heading back down to that $5 MBTU. And I've been talking about and writing about essentially this massive range between 7 and 5, more or less, right? So now that we're down to that lower extremity of that massive range, we'll see if that holds. But I mean, those are the higher odd probabilities, these big swings in the energy markets. So we're trying to get long UNG in the energy sector, and possibly even the futures down in the low 5s, right? So that's one setup that we'll be doing with our members. Yeah, NASDAQ also trying to get long down again where we originated that monster rally. And by the way, still NASDAQ still seems to be the is still the laggard. That hasn't really changed. If you're gonna say which is the weakest market, which market has the highest probability of going down and testing the June lows all the way, the June lows, I think it's still the NASDAQ. Still, I mean, if you think about these mega cap stocks that can't get out of their way, the Amazons, the Microsofts, and even Apple. Apple looks very interesting, by the way, if you're looking kind of a long term. I do think, in fact, I talked to my members right in the low 20s. Take a look at Apple, I think, for a long term. And, we're only, Apple's still sitting at around 132. And I do believe at some point, again, in the first quarter, even in January, I think there's a chance we get down into the 120s in Apple. So that would, if you guys want to start nibbling on that on a long-term basis, that actually could be a possibility as well. So in a nutshell, on the equities, again, we've been grinding lower. Will we have any kind of a bounce? It's going to be interesting. And do we get out of this chop? Well, last night we had a lot of volatility because of the Japanese yen, because of the Bank of Japan. In fact, let me discuss that for a minute. What happened? The Japanese yen, just skyrocketed. As you guys know, it just had a massive rally. And part of that is because for the first time in like 20 years, they're actually raising their rates. They've been negative rates forever, if you guys know. And just, real brief, that rise in the Japanese yen was an unwind of the carry trade. And let me just, again, in 2 minutes, explain what that is, if you don't understand how that works. So Japan has been negative rates for going on 20 years. And in the currency markets, the exchange rate or the between the currencies is used by a lot of institutions, banks, and whatever. And so, in a nutshell, what happens is if you can go to Japan, borrow money for negative, right, negative rates, take that money and go, and now you can come into the U.S. and get 4.5, right, 4.25, or some of the higher rate currencies. That's called the carry trade. So what's happened last night is when the Bank of Japan decided to lift their 10-year, they had a cap on it, so it stayed below zero. They tweaked it and said, we're going to let the rates float above 50 basis points, and essentially raising, I mean, they technically didn't raise rates, but the fact that they just let their 10-year bonds go up for the first time and normalize rates, normalize meaning above negative, above zero, effectively 50 basis points. That carry trade is not as, it's still going to be good, but a lot of that unwind came up, and that's why you saw that monster move in the yen last night. I don't know if that makes any sense, but that's how it works. So remember that currencies always work on the exchange rates of every currency. So that's what happened there. Now, interestingly, if you were looking at the yen chart, which I've been talking about, I think I've been talking to you guys about, like the yen. The yen is like the only two currencies really have been the yen and the peso that I've been kind of talking about. The yen did come very close to a level and turn down a little bit. I think there's a chance we get up there. And that comes in at, there's actually a bunch of levels, but the one I'm looking at is roughly around the 77, 71 area. The ideal one, I think eventually, if you look at the 78 on the yen futures, that's going to be a monster level. But in the short term, I think if we get up around the 77-ish area, that's going to be a really nice short on the yen. In the near term, we've already seen a big pullback. It came very close today and then turned down. If you look at your charts on the yen, didn't quite get up there. I think there's a chance we get up there eventually on the yen. So that's something to look at as well. And then on any pullbacks, I would probably not buy any pullbacks in the yen until we got much further below, probably down into the 74 and change area. So that's one thing. Interestingly enough, if you look at the rest of the currencies, it's only, the yen is about, I believe it's like 12% of the dollar index. The euro is the biggest, but if you look at the rest of the currencies and the dollar, it didn't really move a lot. It was all about the yen. What did move, and again, because and here's the rationale. If you notice, the bonds here, the 30-year, the 10-year, and the 5, just across all the maturities, particularly on the long end, the 10-year really tanked. The 30-year really took a really sold off hard after the Bank of Japan. Now, the rationale behind that, everybody, is because for the first time in forever, the Bank of Japan is actually joining the party, so to speak, and now going and tightening interest rates because they've had deflation for 20 years. The reason they have negative rates is because they actually want inflation, and now they got 4% inflation. And so I think the bond market here, and that's why stocks sold off in the after hours as well, is because that also adds to this whole notion that inflation is now pervasive all over the world, and now not even Japan's getting inflation, which is very rare. And so I think that was the negative kind of reaction that we had last night. But all in all, I mean, the market did recover from that. The stocks did. So I'm looking at, on the bond market, TLT, right? Remember we talked about, so we're trying to short TLT at 113. It got to 109, and it's sitting now back down to 103. So it had a very, very nice pullback. And on the futures, look at the 113.13. We had a nice pop off of that. That's a wick over wick level in the 10-year, and also the 5-year. And again, I think I mentioned the other day, we're trying to get long the 2-year as well at in the low 102s as well. So that looked like it was going to come down. On the short end, rates didn't move as much as on the long end. But there's some really nice opportunities coming up in the bond market now that we've sold off a little bit. Just to recap on the dollar, dollar remains range bound 104, 104.80 down to like 103. Very messy, very choppy. The dollar index, the Dixie. So not a lot to discuss there. I think I already talked about nat gas. That could be coming in. That thing is all over the place. Interestingly, we did get a nice pop in gold as a result of the yen, right? And gold looks like it wants to move higher. Again, very range. I would say gold looks like it's putting in a range between 1780 and 1830, 1835 for now, but it may want to break out. Looks like gold may finally want to break out above 1850. Now let's call it about 1875. So look at gold. There's nothing on the left side of the chart on gold other than a big mess. But I think if we can get above 1876, I think you can get going on gold. And then silver, similarly, silver is actually coming into some really decent levels up in the 24, 25 area. Up around the 25 is a really good level in silver. And silver also had a very nice move as a result of the yen from yesterday. So some good opportunities in the metals. I would focus on silver more or less. Silver's got the better quality levels. So if you're looking to do something in the metals, I would I would look at silver for sure. Okay. And then oil is kind of consolidating at the moment. The big level is going to be around that 78 in oil. But after all those moves a couple of weeks ago that we talked about here, looks like oil is now consolidating and waiting for another catalyst, whether it comes from OPEC or Russia or whatever, another supply kind of thing in oil. Okay. And then lastly, grains. Grains have had some pretty nice, I think I mentioned to you guys the soy meal and soybeans are the only two, in the grain markets that are actually moving a little bit. And just to reiterate, this is very, very interesting. If you look at your chart of the soybeans, it's very, very, and again, this is algorithmic and technicals and whatever. Oftentimes I say it doesn't, it's not brain surgery, but look at how often it hits 1486.50 on the beans on the front month bean contract, the Jan beans, and just literally it just keeps bumping up against 1486.50, 1487, and then just falls back down again. Now that's very interesting because if you can trade that thing, the only problem again with these kind of pivots, which is really what it is where do you put your stop? I mean, if you got to have a wide stop because you never know. They take out the pivots and whatever, but that you can see that very clearly on the charts, right? 1486.50, which also implies that we are probably poised for a massive breakout in the grains coming up. I've been talking about that. Uh, Also, the wheat relative to its monthly chart also looks like it wants to have a big move. As long as it's got to get above 770 a bushel. There's a nice gap in the charts as well on wheat around in the low 730s. You can see that clearly on your charts. So, in any event, any questions? So I think that pretty much sums it up, everybody. Again, Thursday starts if we are going to have any kind of year-end upside move, it's probably, I would be looking to get long, probably the end of tomorrow or Thursday. And again, I wouldn't discount it at all. The market's been hanging in there. So if you guys are maybe even do some options, maybe some SPY, just to, have a position on there if you want to take a lower risk kind of situation going out to year end or whatever, some out of the money SPY calls or something. But other than that, everybody, I think that's going to cover it. Again, one last thing on Friday, in terms of, any potentially market moving situation as the as the volume thins out going into Christmas. Christmas falls on Sunday this year, so Friday should be a light volume day. However, going in the morning, that PCE number at 5:30, 8:30 Eastern could get us, could get you some volatility first thing Friday, and then things will probably calm down after that. But so be aware of that. That's Friday. First thing, the core PCE. The Fed does look at that, and if that number comes in either light, that could actually spark a rally in the S&P or vice versa, right? So just keep an eye on that. I will be here on Friday just to close out the week. And again, if you guys want to sign up for that class, it's going to be a week from Wednesday. I know a lot of people are going to be just hanging around probably during the holidays and stuff. So I do want to run a class. It's going to, again, pertain to outlook for the first quarter. I do expect some turbulence in the first quarter with everything that's going on. So anyways, if you want to join me for that, it's free. It's hit the link below. If you want to sign up for the newsletter and you want to spend 5 days with me, all that's down below. Okay. Other than that, have a great rest of your week. If I don't see you between now and next week, have a wonderful holiday, have a Merry Christmas and all that. For those of you, I'll be back on Friday if you want to join me again. Other than that, trade safe, everybody. Again, thin volume, but I don't get complacent. I think there's still going to be tons of opportunity. You saw that yesterday with the yen and so on and so forth. So if you have the the time and whatever, and I still think that there'll be some opportunities coming up. Okay. All right, everybody. Have a great rest of your week, and I'll see you on Friday. Take care. See you then.